Hello, everyone, and welcome. My name is Nirvana Felix, and I'm the Strategy and Impact Associate with the Women Donors Network. I just wanted to thank you all so much for being here with us with WDN for our Impact Investing series. We are actually halfway through this series. Today is actually the third workshop where we'll be tackling impact investing through the private markets. And we have some really incredible speakers who you'll get to meet a little bit later. The one last thing that I'll mention is that at our last workshop, we had a lot of great engagement in the chat. And so I really encourage you all to not only ask your questions in the chat, but go ahead and share any resources or advice for your fellow colleagues on this call. So thank you again for being with us. And I'm going to go ahead and pass it to our host, Maggie Kulyk.
Thank you, Nirvana, and welcome to all of you. My name is Maggie Kulyk. I am the C3 board chair of WDN. And when I'm not working for WDN, my day job is to be the CEO and founder of Chicory Wealth, which is a life planning and ESG investment wealth management firm, mostly located in Atlanta, although kind of all over the place these days. So I'm excited to be with you, and I'm super excited for this session today. As you know, those of you who've been on the prior calls, what we've been trying to do, sort of work our way through thematically from arguably the simplest form of impact investing. We started with cash. Our last session, we looked at the public markets, predominantly stocks, but also talked some about publicly traded bonds. And today we're really jumping in the deep end. For some of you, it'll be the very deep end. For some of you, you may just know these waters really, really well. When we talk about any kind of private investment, non-publicly traded investment for impact, we've got just some exceptionally good resources here today. So I want to introduce first two folks who are on the team of Stardust Equity. Oh, here we go. There they are. But you just Nirvana, when you did that, my notes went away. So there we go. Okay. I want to introduce them properly. So we're going to hear from Helena and Natalia. And also a little bit later on, we'll be hearing from our member, WDN member, Maggie Jacobs, who's going to talk to us about her engagement with the American Sustainable Business Network. But let me first introduce Helena. Helena Hasselman is the managing director of Stardust Equity, a branch of the single family office of WDN member Molly Gotchman, who I noticed is also on this call today. Perhaps we can give a shout out to Molly, and thank you again for being here, Molly. Helena oversees all investment activities within Stardust Equity and is also responsible for working with external managers on ESG, environmental, social, and governance integration across asset classes. Prior to Stardust, Helena was an investment manager at LGT Impact, a global impact investor focusing on private equity investments in developing and emerging countries. Previously, Helena worked at Goldman Sachs as a member of the distressed investing team in London. That had to have been interesting, Helena. She started her career as an analyst in the investment banking division in New York. Helena holds an MBA with distinction from Harvard Business School and a BCom in finance and international business from McGill University. Natalia Sangvi helps facilitate Stardust Equity's investment activities and supports engagements with external managers on ESG integration across asset classes also. Natalia began her career at Sageview Capital, a growth equity firm focused on high growth tech-enabled businesses where she sourced deals, conducted diligence, and supported portfolio companies. Natalia also worked at DoorDash in a strategy and operations role supporting key user experience initiatives. She holds a BA in political science from Yale University. And as I mentioned later on, we're going to be hearing from our own Maggie Jacobs, WDN member and the New York chapter president of American Sustainable Business Network. And with that, I want to turn it over to Helena and Natalia to do their presentation.
Thank you so much, Maggie, and thanks everyone for joining today. I wanted to start by giving you some background on Stardust. Here's our presentation. Natalia, do you mind just, oh, we're having, okay, here we go. So Stardust is the family office of Molly Gotchman. As Maggie mentioned, she's also a WDN member. Our work is structured around three main pillars. The first pillar is Stardust Equity, which is our mission-driven investment fund. Stardust Fund is our philanthropic fund, and Stardust Arts, which is our collection of arts initiatives which aim to promote change. Today, we're going to focus on the work that we do out of Stardust Equity, and which basically aims to leverage our private market portfolio to empower women and other underestimated groups. I wanted to highlight here that we are focusing the conversation today on gender equity, but we actually have multiple lenses when we're thinking about equity. Specifically, we're always looking to invest at the intersection of gender equity and racial equity. In fact, so when we're talking about our investment work, we're always saying we're investing in a future where all women and girls can fulfill their potential. The reality is we're focused on a future where all underestimated groups, which have been historically excluded from the financial system, can fulfill their potential. During this presentation, we're going to try to focus on two main things. One is how do we translate this mission into an actual investment strategy? And two, what are the asset classes and opportunities available in private markets for investors of all sizes? I'm going to kick it off by telling you how we have defined this gender-focused mandate. So we created three main buckets for us to tackle this problem. One is that we're working to increase access for female fund managers and female founders. So to give you a perspective, only 2% of venture capital dollars go to all women founding teams. That means if you have one female founder or a group of female co-founders, only 2% of dollars are going. If you do it by investment count, that would be around 6%, but in actual dollar terms, that's only 2%. We're also working to increase workplace equity. So one of the things that we're spending a lot of time on during the diligence process is understanding how the company's culture, policies, and practices are promoting gender and racial equity. And we do this because we know that there are still significant obstacles to women and people of color. This is exemplified by the stat given in the middle box, which shows you, the gender pay gap and how that increases over time as less and less women and people of color are rising through the ranks and reaching the higher salary brackets. And thirdly, we also seek to invest in products, services, and solutions that disproportionately benefit women and girls. As we know, women have a multiplier effect, so we feel that by investing in them, we're having a greater impact on society. Before we move on to talking to you about specific strategies and opportunities, we wanted to zoom out a little bit and tell you how you can think about your investments across a capital spectrum. So depending on how much impact versus financial return you're seeking to have. On the left column, the leftmost column, you can see traditional investing. That's how things have always been done, seeking financial returns, regardless of impact or ESG factors. Responsible investing is essentially screening out bad actors from your portfolio. So you're trying to avoid risks. And while sustainable investing focuses on proactively investing on, the best ESG players in a certain industry, for example. Thematic impact investing is what we're doing here at Stardust Equity. which is aiming to target impact themes and financial returns at the same time. So we're trying to get the best of both worlds and not compromising on either impact or financial returns. And further on, you can see what impact first investing means. So you're primarily seeking to have an impact and you don't care much about whether, you know, the return is market rate, is concessionaire, if you're going to lose all your money. And obviously, lastly, you have philanthropy, which is essentially, you know, giving your money away to certain causes, and which is still very valid. You know, if you to be present in many of these buckets, because philanthropy is able to solve many issues that commercial capital is not able to. So in thinking about your private market investments, it's always helpful to consider what type of risk, returns, and impact that you would like to have. On the next slide, we can see how different asset classes have different impact potential. So as you can see on the left chart, private equity offers you the most opportunity to invest with an impact lens. That means that there's more availability of product in that asset class, while at the same time, as shown on the chart on the right, these impact opportunities have, you have more of the thematic kind, so the ones that are deeper or higher impact versus just sustainable or responsible. So just to put it simply, on the chart on page 6, I guess when you're thinking about the type of investor that you want to be, you can think about yourself, where you fall within this Venn diagram. An impact first investor would be someone that is targeting primarily market rate returns with some impact. Impact first investor is, you know, targeting, thinking about mostly about the impact that the money would have and not so much about the return and if it's below market or not. Or a blended investor, which is where we think we, you know, are, where you're targeting impact and market rate returns at the same time. So it's just a simplified way to look at that capital spectrum, but the reality is there are many different shades in between an impact first and an impact and a financial first investor. Now I wanted to turn it over to Natalia, who's going to cover the different approaches that you can have when you're investing in private markets, as well as the different asset classes that are available, and some examples of opportunities that would fit many of the investors on this call.
Awesome. Yeah, so I think Helena did an awesome job of laying out for us how we think about the strategic vision behind Stardust Equity, and how our mission really undergirds every investment we make. But now I want to take some time to really translate what that mission looks like in action and how you build out, a portfolio of private market investments. So at the first level, there are sort of two approaches we're going to talk about today. There is a strategy of direct investments and a strategy of fund investments. And, these aren't mutually exclusive, but just kind of two ways to think about how do you start dipping your toes into the space. So first, thinking about direct investments, in the most basic terms, this is providing capital directly to a business in exchange for shares of that business. And, thinking about why would somebody would want to take this approach, these are often, either a business that you're really passionate about, or you think that they're solving an issue you really care about. You maybe know the management team or have really high conviction in the founders, or understand the industry really well and think this is a great business where you want direct exposure to their growth. And ultimately you make money when they have an exit. So either they're acquired by another business or they make an initial public offering and your capital is returned. And the check size here really depends on, what stage the business is at and what their capital needs are. So we'll talk more about stage on the next slide, but just to say, an entry check here might be anywhere from $5,000 to multiple millions of dollars, depending on the business's needs. And the second strategy is around fund investments. So basically this means an investor is making a commitment to a fund, which is a pool of capital that's managed by a fund manager who, you know, often has some experience either with that stage or that sector, and is really knowledgeable. And then they go out and actually make the direct investments. So it's kind of a way of spreading out risk, getting exposure and learning about an industry or strategy, and then also a way to actually get access to direct investments, as well as fund managers often will say, hey, you know, we're making this investment in a business and there's actually extra space. If you want to write your own check directly next to us, we've already done the diligence. So we can tell you with pretty high conviction that this is a good investment. So that's a lot of, you know, why we think about fund investments as a good strategy. And then ultimately what happens here is that, you know, the fund will hold on to these positions in businesses for a long time. And then as they exit each of those business, you will be paid back. But we'll mention here that there is sort of an element of timing. The first thing is that when you make a commitment to a fund, it's not like the whole commitment is called up front. So you'll actually, over the course of the fund period, you'll be writing a check, you know, every few months or whatever it is that they're actually making investments. And then, you know, similarly, you're paying a management fee, which is usually around 2% of your committed capital that actually goes to supporting the operations of the fund over time. And you're also going to pay a performance fee. So this is like, you know, when the managers do well, to compensate them for a good job. That usually looks like 20% of the return above returning your initial capital investment. And funds generally are looking for an initial check size around $250,000, but it really is variable. And we found that if you go to a fund manager and you're really excited, and a lot of times first-time fund managers are actually willing to accept smaller checks. So that's just sort of the basic overview. And then all of this is really dependent on the stage of the business. So here we wanted to talk about and break out like 3 of the main stages here. There's venture capital, growth equity, and private equity. So in terms of venture capital investments, you know, these are really early stage businesses. They might not even have a ton of revenue yet. And, you know, you could think about them as being a little bit riskier too, because they haven't proven that there's necessarily a product or market fit. You might be the first, you know, check into this business in these cases. But with that risk, you're also compensated with higher target returns oftentimes. And here's where you see, you know, sort of smaller check sizes. You're getting to sort of provide that initial capital, saying like, you know, we really believe in this idea and here's some money to fuel the initial investigation. And then in terms of growth equity, these are businesses that are showing some traction already in the market. And, you know, the management team will probably have ideas about here's where we think we're going to be in 5 years and here's what an exit would look like. So these businesses have sort of been de-risked a bit and, you know, have a pretty strong idea of what their next few years of growth will look like. And to measure it with that level of sort of less risk is also that a little higher check size, because now these businesses are just trying to scale. And so they need a lot more capital to do so. And then in terms of private equity, you know, these are businesses that are quite established market players, and they're often looking to do other things like acquire and find other ways to continue just maintaining their market position. So in all honesty, these are actually really hard businesses in our experience to gain access to as individual investors, because they're, you know, looking for really significant check sizes. But these are just like much larger businesses overall. And then we just wanted to mention 2 other asset classes here. So one is real estate, which maybe many of you have experience with. What we think is really interesting is based on, you know, what type of asset it is, whether it be housing in a low-income community or a hospital, where it's located. There's a huge potential for impact with these assets. So it's a really exciting space that we're learning more about, you know, and constantly looking for interesting opportunities. And then private credit is another one that's really cool. It's basically, you know, there are certain ideas that banks aren't going to loan to because they think they're very risky. And so private credit is a way of sort of stepping in and saying, you know, this is a really important thing to do, but traditional financial institutions aren't willing to underwrite it. And so you act as the bank essentially. But, you know, it provides sort of stable cash flow over time because they pay interest, but it's a slightly lower returning asset as well. And, you know, I just wanted to mention too that to access some of these opportunities, you should keep in mind there are 2 different definitions. There's an accredited investor and a qualified purchaser. So based on where you fall, it will influence, you know, which of these opportunities you're able to take advantage of. So just wanted to put that out there. And then, you know, sort of make this all concrete and think about what does this look like in reality. So for us, here's an example of a direct investment that we were lucky enough to be a part of. It's an awesome business called Elevest. Maybe some of you are familiar with this business. It's a female founder who has deep experience in the space. And basically, their overall mission is, how do you help women build wealth? How do you provide tools, education, and actual access to investment opportunities? So they've created some really thoughtful portfolios with impact underlying all of them to help women of all income levels really access investment portfolio. So it's a pretty cool business. They're currently raising $50 million as a Series B. And I think, doing a lot of the things that this community really cares about. So we just want to throw it out there that, if you're interested in a direct investment opportunity, here's a live one. And the CEO, Sally Krawcheck, her email's on this slide, would be happy to talk to anyone who's interested. And they're actually putting together a special purpose vehicle through which smaller check writers can access this opportunity if you don't want to go, directly. And yeah, so it's a pretty cool one. Definitely recommend looking into. And we also just wanted to leave you guys, I'll let you click through this at your own leisure, but here are some examples of fund investments at different stages that all invest with, at the very least, a gender lens, but often a lot of these ones are also either thematic, focused on education or women's healthcare or racial equity and all these other things as well. So just wanted to leave this here as well for you guys to learn a little bit more. But yeah, so I think I'll hand it back over to Helena to wrap us up and provide some resources.
Great, thank you, Natalia. We thought of sharing with you a few resources that may be helpful. There are networks for deal flow. So several angel networks are listed here on the slide that you can, look into their programs. I think also many states or metropolitan areas have their own set of angel networks. Some schools also do that. So we encourage you to seek out those opportunities if you're interested in, starting to invest in private markets. We also listed some courses. So there are finance courses or investing courses, but also some ESG investing courses that might be helpful and help you understand how to factor in environmental, social, and governance goals into your investment strategy. And last but not least, we have our due diligence questionnaire that we've included here. You can get a sense of the types of questions we're asking our managers when we're doing diligence. The full version is available on our website, and the address is listed on the bottom of the slide. But this is also a very helpful tool to help you think about how do you translate your mission or your impact goals into actual questions that you can ask your fund managers, advisors, and wealth managers. So we hope this was helpful. I guess we have some time for questions, but I'll turn it over to Nirvana again.
Yeah, would love to open it up to see if anyone has any questions for Natalia or Helena, and then we'll transition to Babby Jacobs around 9:30 Pacific.
I'll start, if I might. Thank you both very, very much. This was awesome and very comprehensive. So let's imagine, so you folks are professionals. This is what you do full time, and you do it in a single family office. So you do it with a dedicated pool of capital. And then there are resources for people who kind of want to do it themselves. In a sense, you gave some, some boot camps and some information. What about people who are working with advisory firms? And, what are the sort, I think your questionnaire was great. You could post some similar questions to an advisory or wealth management firm. But I'm wondering, because I think that the biggest questions in my mind come about in terms of doing due diligence on some of these investments and how to understand it and how to know, like, if your wealth manager has access to some of these things. I guess I'm thinking access may be a problem. Depending on, if you want to do crowdfunding, you can do that. But I guess I'm just thinking, if somebody wants to invest $250,000 or $500,000, one of the resources I'm aware of is Align Impact. And I learned of it through another WDN member. And I know Align does due diligence on impact private deals. there may be others out there that you are aware of. So would you just like to speak to that aspect of this?
Yeah, I don't know if I understood it correctly, but the initial part of your question also related to what happens when you have your portfolio managed by an advisor and you don't have direct control or access to the underlying managers. Was that part of the question too?
Yeah, kind of. I'm thinking like if you're working through a wealth management firm and you want to do something besides publicly traded investments, what's been your experience? Are there, I know there are numerous alternative investment platforms out there through big wirehouses, et cetera, but how many of them are impact and sort of how to evaluate them? And I guess I'm asking for your sort of overview of the field and availability, et cetera.
Yeah, like we don't have, I guess, enough exposure to those because we've been doing this in-house and we work with advisors on our public portfolio. But there are a number of wealth managers, I would say, that are more focused on impact. So you mentioned aligned. There is, I think, is also another option. There's one more that I'm blanking on the name now, but they're like smaller. Oh, Elevest is actually an example as
Okay.
well. They are obviously a female-run company focused on female investors and that are offering clients not only investment options in public markets, but also in alternatives.
Oh, cool.
Yeah. So there are a number of resources and they, there's no minimum account size for opening an account there. I can't tell you exactly what the minimum ticket is in one of these alternative investment products. I see at the large banks, usually they start at 250,000. But I think, in these smaller shops, the minimums are lower. Is there anything else, Natalia, that you would add?
Oh, sure.
Yeah,
So-
and like there are an angel, that's why I thought of the angel networks as well, because there you have very low minimums. And there are funds like, Arlen Hamilton's fund. She is always raising special purpose vehicles for different investments. Steel Sky, one of the fund managers that we mentioned, she's also constantly raising special purpose vehicles for investments that would not otherwise be available to smaller investors. So you're able to put in anywhere from 10,000 to whatever you want. So many of these emerging managers that we see in the venture capital industry are, because of the fact that they are new to the industry, they have a hard time raising their own funds. And so they are constantly raising SPVs for making investments. We know a number of them. So I guess we could also share a list of the ones that we know are always in the market for capital.
That would be great. Because Sarah asked, do you know any crowdfunding investments, curious about options for non-accredited investors? Are these special purpose vehicles still also typically limited to accredited investors? So even if you want to invest at a smaller size and get pooled with this vehicle, you still have to be accredited.
I think you have to be accredited. Yeah, you have to be accredited, but not qualified.
But not qualified, right? But on the crowdfunding option, any thoughts on, any views on that whole universe?
Crowdfunding, I'll have to get back to you. It's not a space that we navigate, but I imagine there must be. I think the risks there are different. And
different.
Yeah.
Higher, perhaps.
Yes, perhaps.
Also known as higher. Yes.
That's right. So obviously, with all of these investments, something that people need to keep in mind is that these are highly illiquid. So you really need to understand your portfolio allocation and how much capital you're willing to tie up for many, many years, up to a decade.
Mhm,
But that's the nature of, this type of investment.
great. So I hear you on higher risk, says Sarah, but also obviously accessible to a much broader set of investors. Although the implications are that Ellevest may be doing some things that's not exactly crowdfunding, but lower minimums. We should all check that out. Very
The
interesting.
other thing that is happening in the industry is there are more and more startups focused on getting venture and private equity products to retail investors. So, whereas a lot of, later stage funds are requiring $5 million tickets from an individual investor, these platforms such as Moonfair that just launched in the US, they are opening up access to private equity products. And I think the whole industry is moving towards that, by the way. So I think we'll see more and more availability of alternative investment products to retail investors.
That's great. Great. Well, thank you so much. Folks who are listening, please feel free to continue to ask any other questions that come to mind. But I want to, I think we're at time, so I want to turn it over to our WDN member, Babby Jacobs, to talk about some of her experiences. Welcome, Babby. Thank you for being with us.
Thanks so much. And nice to have friends on this call. I'm going to take this in a whole different direction. You guys are amazing and you're pros. I am an individual on a journey and I'm very passionate about the work that I do. I call it work because it is a lot of work to do well with our money, as we all know. So my journey started when I was 19 years old. My mom was killed and I got $20,000 and I thought, what the hell am I going to do with this? So I looked up a stockbroker in the Yellow Pages and I walked down to his office in Littleton, Colorado, and he put me in the 5 equities, and that was the beginning of my journey. So a good start. And fast forward, when I inherited some money, I was actually kind of sick to my stomach. I didn't want the responsibility. I hadn't grown up with money, and it was sort of a new experience to find an advisor. And I know that can be a pretty daunting task. I felt humiliated. I felt embarrassed. I felt overwhelmed. I would leave the office exhausted and frustrated and went through several iterations until I actually had some real resources. And a friend of mine introduced me to his broker who shares my deep concern with impact. And I love this man. It has changed the whole thing for me. Having someone I trust, and I love him like a brother. I could call him and say, Bill, what do you think about this? And he'll patiently say, that's a great direct investment, Babby. It would look great in your donor advised fund, rather than saying, are you kidding? That's a terrible investment. So he's loving and kind, and it really changed everything. So if you're looking for a values aligned advisor, I shared the link to help find one through to Nirvana to help you find there's a resource out there to help you find advisors. I also worked on what was important to me. And if you haven't had the chance, my friend Janine Firpo wrote this book, Activate Your Money, Invest to Grow a Better World. And it really helps take you through identifying what's important to you. And so I've shared that also with Nirvana. It was so through there, and I'm thrilled to say that several WDN members have joined us on this journey. They've designed a 6-session course with Ask the Expert sessions in between. So we're doing this 6-week exploratory journey together to start it. We're going to launch our 3rd session next month. And so keep an eye out for that if that's something that interests you. So it's my story is kind of quirky. I made a snap decision to move from Alaska, where I had lived for 30 years, to New York. and started working with an organization called Boulder Giving, which several of you know, and I got to meet. And it was a group of extraordinary philanthropists doing remarkable work up at all hours of the day and night, but really not doing a lot with their investments. So that's where I got led into Investors Circle, which is an angel group, a membership group who look at impactful deals and then decide whether or not we want to go through the process of doing what we call due diligence, looking into the background, the competition, and learn more about the company and try to engage others in investing. We're all volunteers doing this out of passion and love and concern. And it's really been a great place to be during COVID, especially because these are smart, compassionate investors and entrepreneurs coming up with some incredible solutions to address some pretty massive problems. So, I can say that, I get a lot of joy. I get a text on Sunday night from Tanya, who's developed a financial literacy app, saying, I just met Robert Smith from Morehouse College, and he's engaged 3 Knicks basketball players to give $2 million to start bank accounts for Black and brown kids. And then I get a text from Yasmin who says, I just got a $100,000 investment to help provide safety devices to domestic housekeepers. And I get to know these entrepreneurs, but I also get to hear their tears and their sorrow too, because this is not for I have a lot of admiration for these entrepreneurs. But the direct investing has been a lot of fun. And, is it risky? Yes, but doing nothing is even more risky, in my opinion. So from there, we've been trying to grow our New York chapter of Investors Circle. We are now under the auspices of the American Sustainable Business Network, which is great because it gives us the opportunity to do some more policy work, which really supports our entrepreneurs. So I stepped up as the volunteer chair of the New York chapter. And then during COVID, really realized that we had more work to do. These investors were great. They stepped up to the plate. They started writing checks. They offered their homes to the entrepreneurs during COVID, offered help with the PPP loans, which were a disaster for many of these small startups because the big banks wouldn't even return their calls. So what we found was that the CDFIs, the Community Development Financial Institutions, were really the heroes on the street. They knew the businesses, they supported the entrepreneurs, they were supporting the healthcare centers and the childcare centers and affordable housing. So what we ended up doing, each knowledge in this together, the largest list of investable CDFIs for individuals. Out of 1,100, we've identified 70 that can accept individual investments. It's not easy. It takes a patient broker to help you finesse that. It's not like you can just click on their websites. But through that, I've gotten to fund organizations that are helping do employee worker conversions, where an individual can convert their business so that the employees are now the owners. I've gotten to invest in Awista that supports 60 Native led CDFIs. I feel so much joy with the work that we're getting to do with the CDFIs. So again, I shared that list with Nirvana, who will send that out afterwards. And we also started the Transforming Ownership for Social Justice, which, as I mentioned, we're having what we call the silver tsunami. And that's people my age who say, I can't run my business anymore. As one of my favorite members here, Ms. Stranahan, is doing, going to local businesses and saying, there's another option. You've run your business well for 40 years and you've got 35 employees. So maybe, just maybe, you can transfer the ownership to those employees. So we're doing a lot of work with that, working with policyholders, policy influencers and individuals, and doing a lot of outreach. Communities are knocking on doors and letting people know that this is an option. You don't have to just give your business away. You can actually make a real sustainable difference. And then the third group I started was called a Restorative Investing Task Force. And what we did is we decided that, it's great that we get to invest and write checks in these wonderful impact businesses, but sometimes the terms are rather extractive. and we end up being the ones making the higher returns. And really what we're trying to do is find more opportunities to invest where the community comes up with the project, the community benefits from the project, and we may just fund the in-between. Several of the people on this call participated in a project called Navajo Power that I got the privilege to be involved in. It's a Navajo Nation bringing solar power to the communities. And it was designed with the help of the Candide Group. One of our members, Karen Grove, the Grove Foundation, was a funder. And so what they're doing is they're putting together a $10 million debt instrument to help them get to the place where they can actually be self-sustaining, bring Navajo Nation solar power and employing the indigenous folks that live there, what they call turquoise share. When they make money, it goes right back into the community. So that's what we're doing with the Restorative Investing Task Force. Maggie said that the next session will be focused on donor advised funds and such. And I'm happy to say that with our Navajo Power, we had people invest through their donor advised funds, through iGive, which Maggie and Ellie know a great deal about, and through their self-directed retirement accounts, which is something that's kind of fun to learn about, is that you can actually direct your retirement money rather than just going into the prescriptive opportunities. So I don't really know. I'm invested in some great funds, as were referred to here. TriLink Global is one I really love. They're doing amazing work around the world. They have now a Main Street USA Women and Minority Led Fund, Cachua Fund, which is a B Corp, sustainable business, and does a lot of cooperative work in real estate, and it's all cooperative led. So this is fun for me. This is what I do. And you're looking at my mind daunted and, you know, patronized. I feel excited and rejuvenated and really honored to be able to do this work. And I love being able to do it with some of you. So it's been fun to have you join me on this journey. So that's sort of what I'm up to. But this is all volunteer. This is not, there's no, all of us are just doing it because it's what we believe in. So.
Wow. You're breaking up just a hair sometimes, Babby. So you're freezing just, it isn't just me, right? Is she freezing just a hair? Okay. But it's, I mean, I'm tempted to say, well, so, you know, but what do you do with all your leisure time? I mean, Lord, you're very inspirational. I'd like you to, I have a couple of just really basic questions because I'm trying to understand, I'm trying to think about the whole picture of all the things you're involved in. And I'm going to ask you what might be a personal question, so feel free to not answer, but I'm curious, what percentage of your own personal assets that you invest are in these direct investments, right? Because we were talking earlier, you know, even the small ones, they're fairly illiquid. So you have versus money in the public markets, which I'm sure is also, you're very mindful of what you invest in there. Do you have some sense of proportionality as you thought about this over your own life, or do you just kind of go on in? Like, what sort of orientation to this?
I'd like to tell you I have a great plan and that I stick to it, but I can tell you I meet an entrepreneur and I'm all in. So
I see. So yeah, so you're a serial monogamous entrepreneurial funder, right? Okay, it's like your own.
At this point, my direct investments are about 5%, so they're pretty small overall. Okay. But through the CDFIs, I also get to do a lot of community-based lending.
Sure, absolutely. Okay, got it. And can you say a little bit more about when your advisor says something like, it belongs in their donor, your donor advised fund? Can you talk a little bit about, because we are going to transition to, that's going to be, as you pointed out, our next topic, our fourth session will be sort of venture capital done with a real deep mind to supporting the founders and wealth building of the founders, and then also, you know, the use of donor advised funds and some of these other impact investments. So I'm just thinking about, like, mechanistically, like how it got done, like the Navajo Power. Did the donor advised fund, for example, was it a loan out to Navajo Power? Is that what happened? Was money from your donor advised fund, for example, loaned? Or how did it work? Can you tell me a little bit, or tell us a little bit more about how that worked? And what platform you used?
Yeah, I can tell you some of the details. There are very few donor advised funds that I've come across that will actually allow you to do this. And if they do,
Yes.
they charge pretty high fees.
Yes.
But Impact Charitable is a great organization out of Colorado. So if your donor advised fund won't allow you to invest, you can go through Impact Charitable and they'll invest and then they'll put the returns back into your donor.
We're having a little trouble. We're having
I mean,
a little trouble hearing you, I think, but
this is, and Impact Charitable, I think that's it. There's so
okay.
many screens open, I'm sorry. Affecting my.
No, it's fine. Someone on the call, Jen, who's on the call, said that it was a quote unquote recoverable grant. She must have been, and Jen, you must have been involved in that. That's what it was. That was the.
It depends. It depended. I mean, if you did it through your donor advised fund, it was now philanthropic capital.
Right.
But I did a direct investment, so I will get a return in March.
I see. Right. Okay, got it. What other questions? Gosh, goodness, I'm sort of reeling with all the different things you've been involved in. I'm personally interested in the transforming ownership for social justice piece that you're working on. I'd like to hear more about that. And then someone also, Molly asked that she'd love to learn more about how to get involved in the New York circle and the policy work. So just if you want to speak to either of those, that would be great.
Sure, the policy work is easy. You can join anything. We do lots of webinars. We call the Next Economy Live. That's through the American Sustainable Business Network. And I think Nirvana had already included that post. And I forgot the other question already.
Oh, just a little bit more about the transforming ownership for social
Oh,
justice.
the transforming.
Yeah. If we can get you.
Yeah, so we put together a web page that Nirvana will share, and there are funds that you can actually invest in. It's a long process, as Mary can tell you. It can take a year to 5 years to help really transition. It's not a matter of just handing over the keys. You know, the employees have to first want to be owners, and two, have to learn, you know, all the skills involved in running the business. And as you know, Mary's done so elegantly in Montana, the businesses are stronger for it in the end, and then it's more democratized in the community. So we put together a web page of funds that you can invest in that support this work. Seed Commons is one of them, one of the more well-known ones. But we also realized that there needs to be more of a pipeline. We're trying to get away from the word pipeline. That's an extractive term, but more of a deal flow. So we are doing a national mapping landscape to try to identify all the policymakers. New York is doing extraordinary work in this place. So is Madison, Wisconsin, Oakland, California. Some of the people on the ground, the local communities are doing great work, knocking on doors, letting people know this is an opportunity. So we're trying to see if we can identify more businesses, identify more investors, and work on the policies at the same time. California is doing some great policy work that should be coming out in the next few months.
Can you say just a little bit about the types of policies that you're trying to get in place that facilitate this? I'm unclear sort of at the policy level what needs to change in order to facilitate these things happening. Can you just speak to that a little bit?
A little bit. I'm learning as I go, but
yeah, well,
one of the big things was the Small Business Administration used one person to sign off on the loan. Well, when you're transferring your business to 40 people, that sort of defeats the purpose. So we worked with the SBA to try to change those regulations, and we have a pretty friendly administration right now.
Okay.
So making capital more available and actually funding. So like I said, there's some great work coming out of California we just heard about yesterday.
That's great. Great. Other questions, anybody want to raise any, even from the group, if you want to come off mute and ask it, if you don't want to. I'm going to go to gallery view here just to see if anybody's raising their hands. Babby, I know you mentioned Mary. That's Montana, out in Montana. Is that right? Is that happening out? You want to say anything? Well, we have a little bit of time left, Mary, about your experience out there.
Yeah, Betty, we're not doing ESOPs. We are buying businesses of owners who want to retire so that they don't have succession plans. So we buy the business, we operate the back office. We have increased the pay scale for all our employees. We now have a payroll of 72. And we actually have an investment tool right now. I am not a smart investor, so I'll get the vocabulary wrong. But it's like a 10-year bond where we offer 5% a year payable on a quarterly basis. So it's a pretty good, and we're trying to raise 5 million. We've got 2 in the bank now. We use my 3.5 million fixed income to buy the first 6 businesses. And now I'm out of that money. We're making money hand over fist because we happened to fall into the hardware lumber business at the beginning of COVID. So our criteria is a business owner wants to retire. The business is profitable. It's been in business long enough, so it's been through some recessions. And here's the real theoretical thing. It is Amazon proof. And that's quite theoretical. So that's what we're doing. It's called Good Works Evergreen. If anybody wants any information, I'll be glad to send a deck. And thank you, Babby, for mentioning me.
Yeah, by all means, send the deck. That's very interesting. So you're actually out there using your capital, you bought a business, and you'd like to do this with other businesses in your area if the opportunity arose, I gather, right?
At this point in time, we're only in Montana, but we've been asked by Vermont and New Mexico, for example, to put a manual together so other states can do this. So we're buying businesses. We own 7 now.
7
Yeah.
businesses, of which one was this hardware, or you all?
No, they're all.
They're all okay. So you've got it.
Lumber. Yeah.
Interesting. Amazon proof. Until Amazon figures out how to deliver lumber, right?
Well,
Yeah.
that's the big theoretical for sure.
Yeah. Gotcha.
The other Achilles tendon is getting general managers for the businesses. So
Yeah.
those are our 2 Achilles heels.
They don't run themselves, businesses.
No.
Got it.
But by back office, we've made their businesses much more efficient, which has allowed us all employees have healthcare now. They all have a 401k, and they all have, somewhat livable wages.
Mm-hmm.
So
So you're sort of like a homegrown alternative to private equity, really.
yeah, my CEO.
Is that right? I mean.
Yeah, exactly. My CEO cooked up this deal. So.
Okay.
And used my fixed income to get it going. And it's been, frankly, because of COVID and falling into the lumber business, we're killing it.
Yeah, it's great. That's awesome. Well, this is very inspiring. It's true what they say about WDN. The secret sauce is the members, right? The members and all the interesting thing members are doing, and being able to learn from each other. I mean, this is fantastic. Really great. We're almost at time, and I guess it's time for me to kick it back over to Nirvana. And I'll say again, what a wonderful job you've done putting this all together, sending out all the resources. I do this for a living. I'm just scraping the resources. I'm like sending this stuff out to my team. I mean, it's just great. So I've really enjoyed being with you today. Thank you again, Babby. Thank you, Natalia. Thank you, Helena. And take it away, Nirvana.
Awesome. Thank you, Maggie. And just echoing what Maggie said, a huge appreciation for all of our wonderful speakers today, Helena and Natalia from Stardust. We have our WDN's very own Babby Jacobs, and of course, Maggie Kulyk, our wonderful host. And so we are more than halfway done with our Impact Investing series. And I sincerely hope that you all will join us for a very last session. which is coming up on March 2nd. And arguably this has the best title in the series, Getting Past Bros, Funding Bros. We're going to be joined by two amazing experts, Jenny Casson and Esther Trukosh, who are going to be talking about donor advised funds and alternatives to venture capital. So March 2nd, 9 to 10 a.m. Pacific, I hope to see you all there. And in the meantime, I will send a follow-up email with all of these rich resources from the chat and from our conversation. So thank you all so much for joining us, and we'll see you in a couple of weeks.